Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Over the past day and this morning, the euro has reached the target range of 1.1420 and 1385, corresponding to the highs of June 2019 and 2020. The signal line of the Marlin oscillator has slowed its climb, and the overbought zone reaching the peak last seen on March 11. There are no other indicators of trend exhaustion or reversal, so price action will likely continue to follow the upcoming target levels. If the price falls back below 1.1276, we expect a move toward the 1.1110-1150. A drop below that range opens the path toward 1.0955. Should the price find the strength to break above the 1.1420 and 1385, the next target becomes 1.1535. The H4 chart's technical picture is similar. The Marlin oscillator has reached a local high this time, from April 3, and the price is currently hovering around the 1.1276. A confirmed break below this support opens the way to the target zone of 1.1150-1110. The MACD line is approaching this support zone. If the price slows its descent and reaches the support area, this line could reinforce the range. A breakout below both the range and the indicator line would signal a medium-term trend reversal to the downside. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair over the last 5 trading days stands at 171 points, which is considered as high. Therefore, on Friday, April 11, we expect the pair to move within the range limited by the levels of 1.2778 to 1.3120. The long-term regression channel is pointed upward, but a downward trend is still present on the daily time frame. The CCI technical indicator entered the overbought territory, indicating a downward correction, which now appears to have ended. The GBPUSD pair began to fall sharply, but that decline is now over. We still do not recommend long positions, as we believe the recent upward movement is just a correction on the daily time frame chart that has already become illogical. However, if you're trading purely based on technical signals, longs remain valid with targets at 1.3062 and 1.3120. Since the price is above the moving average line, it's a sign line on the graphic. Sell orders also remain attractive, targeting 1.2207 and 2146, because sooner or later the upward correction on the daily chart will end. That said, with Trump introducing or raising tariffs nearly every day, the dollar keeps falling, and this could continue for some time. That's all for today. Wish you best of luck.